I think it's important to think back to what drove the Chinese miracle or the China miracle. And if you look at how China financed itself and its GDP growth, it was almost solely due to real estate speculation. Real estate prices rising, local governments selling more real estate to fund their operating deficits, and it was a very pro-cyclical cycle of rising values, more speculation, more sales from local governments, and that created an economy where the average Chinese citizen has 70% of all of the assets in China are invested in real estate. And what that miracle produced was meteoric reported GDP growth and all the concentric circles that surround it. And you and I both know, and those people that let's say follow China closely understand that the birth rate of the average Chinese female has dropped to 1.2, and it requires a birth rate of roughly 2.1 to sustain a population. So we're seeing a pretty significant decline in the population, and I think those two things are inextricably linked. So if home prices got to be north of 20 times median home price to median income, for instance, in the US and its subprime greatness, we got to 6 times. So China got over 20 times. Today is about 17 times in the tier 1 cities. That means the Chinese men can't afford to buy new dwellings when they come out of university. Then they're not having sex, they're not marrying, they're not having kids. So the birth rate collapsed when real estate speculation got to its zenith. So a couple of years ago, Xi Jinping said that financial security is national security. And if you know, he basically stopped real estate speculation because he realized too late that it had created a real problem in the architecture of the Chinese economy. So every single public real estate company, developer in China is in a state of bankruptcy today, or default, in most of the private ones. In the local government financing vehicle market, the market that either sold bonds or borrowed money from banks to run their operating budgets outside of real estate sales, that's a $13 trillion market, dollar equivalent market in yuan. And the majority of that market's not paying. In fact, it got to a point in late October of 2023 where the PBOC said in our next set of bank reviews, any local government financing vehicle loans that are non-paying will be deemed to be paying. And it won't affect your bank rating. That was a public statement the PBOC made. So when you look at what created China's miracle, it's now the exact opposite. They've got almost 400% banking leverage to GDP. They've got a scenario where they've got youth unemployment at a minimum of 25%, and the gray market says it's 40 to 50% of youth can't find jobs. And in a speech on New Year's Day, Xi Jinping actually admitted that youth unemployment is a real problem. He actually inexplicably decided to declare that China's economy is actually having problems, and he declared that publicly. And as you know, they don't normally do things like that. So I think you have a scenario where real estate isn't going to bounce in China. It can't. Xi Jinping's got to get that ratio back down to a number that allows population growth. And again, this is the unintended consequence of allowing a market to run unchecked. And so I think you're seeing a banking crisis. You're clearly seeing a real estate crisis. Banks have 1/3 to 45% of their assets in Chinese and Hong Kong real estate loans. So you've got the perfect economic storm hitting China at a point in time in which the geopolitical tensions in the world are at a, call it a multi-decade high. So I think they're in real trouble.
Well, and I definitely want to talk about the implications of that, but just before we go there, okay, for the layperson, it may be difficult to understand how an economy could grow the way the Chinese economy has grown over the last several decades. purely on real estate speculation. I mean, I might add, there's been some significant flows from the West, right, in terms of Western investment of a variety of sorts. But like, can you and just encapsulate that? How did that exactly work, and how is it that at the moment all of this is worth nothing? All these companies are in default.
Yeah, I think it's a great question. When you think about China Inc., you have to think about it in two spheres. You have to think about their domestic marketplace, where their banks are, where their capital markets are, and how it operates with the renminbi or the yuan, however you want to say it. And that market is controlled by the state. It's a state-controlled operation, as you know. It's a totalitarian government, and they have their own version of capitalism with Chinese characteristics, which we will get into what that means. But the point being is, they can control that marketplace if they control their own currency printing, because, as you know, they still have a closed capital account with the world. We give them the benefit of the doubt of the conversion of RMB at a spot rate into dollars. And imagine if China were to abandon its Great Wall around its capital, and they allowed the average citizen in China to invest abroad, to travel abroad, and spend abroad. If they just opened that capital account, what would happen? Well, the RMB would drop 40 or 50%, and their GDP in dollar terms would actually drop 40 or 50%. You see what I'm saying? We're giving them the benefit of a conversion rate of a contrived number because they have a closed capital account. So when you say, how do they do it? If you allow your RMB-based marketplace to grow unchecked in real estate, and you plug the holes in the banks with more RMB, you can create a significant domestic inflation number of assets, which they did. And then when they report GDP, they take the RMB GDP number and convert it at a closed capital account spot rate into the dollar, and we give them the benefit of the doubt of that conversion, and we say, wow, in the last 15 years, they've grown over 500% GDP in dollar terms. Well, that's because they still have a closed capital account. And you mentioned that we've seen significant flows into China. We believe through the passive indices of the Lehman Brothers Bloomberg aggregate bond indices and the MSCI World Equity Indices, we believe there's $2 trillion of passive capital in dollars that has gone into China, again, at that artificial rate. So they grew a market unchecked in a speculative frenzy of real estate and reported GDP. And then they constructed a narrative around how you have to invest in China. Look at how fast we grow. We're growing double digits every year. You'd be stupid not to invest here. And then dollars flowed in. And that was the Chinese government's, i.e. Kind of their way of becoming very influential on the world stage very quickly from an economic perspective, when it was somewhat of a Potemkin village. And we're seeing that now. And again, I know all of this sounds like hyperbole, but it's exactly what happened.